Good afternoon, everyone. Hello, and thank you for joining us for the fourth and final installment of Stepping Up, Stepping Forward, What's Next for Texas Business. Today, we are discussing wealth considerations for Texas business owners. I'm Donna Bragg, CEO and publisher of Texas CEO Magazine, and with me today is Chris Cooper, Area Wealth Executive at Regions Bank. Chris, you want to wave hi to everybody?
Glad to be here, Don.
We're glad to have you here. Chris leads the private wealth management team for Regions Bank in Houston, Texas, and also in Austin, Texas. Chris joined Regions Bank in October of 2013. He's a certified financial planner with more than 23 years of experience assisting clients with retirement planning and asset management and estate planning and succession, I should say. Chris has a master's degree in securities analysis and portfolio management from Creighton University and a bachelor's degree in business administration from the University of Arkansas. So very well qualified to talk to us today about wealth considerations for Texas business owners. And let's start, Chris, sort of with the main challenges that business leaders faced throughout 2021. Do you think, first talk about the challenges, and then do you think they'll spill over into 2022?
Sure. Well, I think one of the most pervasive challenges that we faced in almost every sector in Texas, in every economic sector, was competitive labor market and wage price inflation that was certainly pervasive. It's a very, very competitive market to get talent and retain talent. I was able to participate in a Greater Houston Area Economic Forum, the Greater Houston Partnership, and we literally went around the room and spoke to business owners and executives from every business you can think of in just about every sector, and answered the question: A, are you hiring? And B, if so, how competitive is it? And so as the conversation went on, they kind of reshaped the question and said, well, let's give it a scale of 1 to 4 for each question. How aggressively are you hiring? If the answer is yes, you are hiring, and then how competitive is it? And there were very few answers that were anything short of 4 and 4.
Wow.
4 being the most aggressive and the most competitive. So it's impacting just about every employer in this area, and it is something that I think will carry over into 2022. Supply chain issues was another hot topic for 2021. And I would love to say that we're seeing some relief in that. But, I saw some reports and economic data just this week that indicates that we still have ports that are not fully functional. We still have cargo ships floating around in the various areas waiting to get into port. We have challenges getting all the containers offloaded. And now there's a new wrinkle with possibly some trucking and transit issues. So I think we're going to have to deal with that. I don't really enjoy having to say we're going to have to deal with increased pricing and increased labor costs and implore more patience. But I'm afraid that's where we stand right now.
Mm-hmm. Well, which industries and sectors are you projecting to showcase the most growth in the coming year?
Very interesting dynamic right now. So with commodity prices very, very high and interest rates rising, we're calling for a little bit of a shift in the types of growth that we've seen historically in the recent past. Been a lot of large company in the tech space that have had just extremely strong growth. And while we won't rule that out, we are seeing kind of a shift into energy, financial services, basic materials, industrials, and more cyclical companies and sectors. So we're actually, as part of our 2022 capital markets expectations, encouraging and calling for maybe a shift to value investing, not away from growth, but really as a complement. If it's not in the portfolio, we're encouraging that some value plays are in the portfolio as well. We're also calling for small cap maybe to creep up and fight hand to hand with large cap stocks, particularly in the United States, as that's, although small cap did probably better than we expected last year, I think we're calling for that to be a stronger investment play in 2022. All of that leads to kind of an overriding theme, which we're seeing. There's increased volatility. And in recent past, and we think going forward, you'll see kind of a bent towards active managers creating some value. We're not calling for active managers to significantly outperform benchmarks, but for many, many years in the recent past, you could simply be a benchmark or a closet benchmarker be very passive, very low cost in your investments, and there's not really much compelling reason to change from that.
Mhm.
We're seeing an opportunity now where there is some correlated higher returns with imposing some active management in the portfolio. So we're implementing both passive and active with a little bit of a lean towards active investing.
I'm curious about those terms, active management. What exactly do you mean by that?
Sure, it's a great question. So, for many years, you could simply own the S&P 500 in the
Mhm.
form of a very low cost ETF or an index mutual fund, and there's certainly nothing wrong with that going forward. We're not abandoning that strategy. But if you wanted to complement that strategy with some mutual funds where they weren't simply, the portfolio managers were not simply owning the entire S&P 500, but really looking for some stock picking opportunities and maybe some trading opportunities through some pricing valuations that were incorrect or lagging, that you could take advantage of that and make some money that way. We're seeing that sort of play come into being more reasonable for some alpha and for some growth going forward. So it's a nice shift. I love to compare it to football. I'm a football guy. I love the NFL, and so for years and years and years, you rarely saw a running back being drafted in the top draft picks of the first round.
Mhm.
That situation has changed as defenses have, learned to adapt to the spread offense and the West Coast offense, and we're seeing a very similar situation in investing where what was yesterday's style is not dead and gone, but there's other styles that you might want to introduce as well to complement.
I love how you can compare football to just about anything.
Yeah, stick around. It may happen more throughout.
Well, let's do it again. So we talked about some of the sectors. Are there any market signals or key trends you're aware of that we should be on the lookout for?
Sure. Uh, Depending on which financial institution you follow, there's lots of conflicting reports about
Right.
not if there will be an increase in interest rates from central banks, but how many.
Yeah.
And we certainly, are saying that we should be very mindful that the Fed is likely to increase interest rates, and I think you'll see less accommodative central banks throughout the globe. The exception of that probably being China, but throughout Europe, different parts of Asia, central banks will be less accommodative, looking for us to come out of the pandemic, looking to maybe tighten up things a little bit and increase interest rates. So that's going to be a key trend. That's something that a lot of borrowers have not faced in a long time.
Mhm.
A lot of bond investors have not faced in a long time. We've been really, really spoiled to declining interest rates, which has been great for using leverage and also for being a bond investor as prices would tend to go up. Now we're seeing a reversal in that trend. And I think that's going to be a challenge for a lot of folks and a challenge, quite frankly, for a lot of people on our team and throughout this industry to help manage through that.
Sure. So, if you could narrow it down, what are the top three wealth considerations that you'd encourage Texas business owners to keep in mind for this coming year or the year we're in? I keep saying the coming year. We're already here.
We're
We're
here.
well into 2022.
Yeah, we're
It's
here.
amazing how fast
Honestly,
it creeps up.
I think number one with a bullet is if you don't have a personal wealth plan in place, I highly encourage everyone to do that. And that is something, full disclosure, that is not something that we encourage because we charge on it. A lot of times we do planning, it's just kind of part of our services.
Mhm.
But what we found is when there's any disruptive issue, certainly March of 2020, when the pandemic was new and lockdowns were beginning, the clients that we dealt with who had a wealth plan in place, we could revisit that plan. We could go back to the forecasts and the data that we had. We could stress test those forecasts using Monte Carlo simulation and really test into answering three questions. Number one is, where am I financially? Number two, am I on track for whatever stated goals that they have? And number three, what needs to change? And so those are the three main questions that we seek to answer through wealth planning. Clients that we had engaged in that process fared much better in terms of just their investment performance and their peace of mind and really quality of life compared to those that didn't.
Yeah.
Those clients were much more proactive and had some actual data that we could look at to determine are we in a good position or do we need to change? And then if the answer was no, you're not necessarily where you need to be and you do need to make some changes, it was based on analysis. It was based on some math, quite frankly, that tied to priorities that they had articulated. So I think that is a very, very valuable piece, and that is something that we preach over and over again to our clients. It just helps us make better decisions, and it gives us the tools that we need to really help guide. Secondly, I think it's important to define real risks. We spend way too much time in this industry talking about market risk, and I don't want to downplay that. That is real when you see volatility in the stock market and the bond market and various capital markets, and you see that it's difficult to get any return on your cash. That is a real consideration, but those are not the devastating risks that a lot of people have to deal with. The most devastating risk is the risk of being a forced seller, and that pertains to any asset class: stocks, bonds, ownership in your business. If you are forced to sell at a time that is inopportune, because you have another opportunity, or you have a cash need, or you have economic circumstances that force you out, those are the types of events that take months, years to recover from. To put in perspective, I believe the recovery I mentioned March of 2020, when the stock market was very volatile. If we talk about market risk compared to the risk of being a forced seller, the market risk that you engaged in, which was very real and felt very painful at times in March of 2020, that recovery was about 4 to 6 weeks in duration. If you're in a situation where you had cash needs and you had to sell any of your investment portfolio in March of 2020, and you turned unrealized losses into realized losses, it could take you many, many months or even years to recover from a 24% realized loss. So what we try to do to mitigate that, is number one, let's talk about it. Let's also define how much of your liquid net worth is not invested, which seems counterintuitive for an investment person to say. Let's spend some time talking about what you don't invest and what is a healthy cash reserve. And that we define as an amount that you're not going to worry about getting any return on. And you understand that cash, while sitting there, might lose purchasing power in the near term, but it goes a long way in helping us to have some dry powder in the event that you need to fix an air conditioner, or infuse money into your business, or replace a vehicle, or any other capital expenditure that you didn't plan for. And the other thing we do then is speak about maybe implementing a line of credit or some credit facility such that there's a short-term bridge in the event, again, that you may need to move on an opportunity or react to an emergency, and you have an opportunity to keep your assets invested to the extent possible and invest through the full economic cycle. And then a final issue, near and dear to Texas business owners and business executives is something that they're tired of hearing about, but I'm going to talk about it again. And that's business succession planning. We saw some great events throughout the past years. We saw some tragic events where we had business owners who, through health reasons, had to speed up and ramp up their business succession planning. And in many cases, it was not that they had just suddenly died, but they had a health issue that precluded them from doing the day in and day out work and channeling the amount of energy and focus that it takes into being an executive, into being a business owner. So we saw people that were forced into a quasi early retirement, and for business owners, that can have a lot of detrimental effects if you have business partners, if you have shareholders, stakeholders, and particularly if you have family members that are involved in that. So business succession planning is tricky, and it's very, very hard to talk about the exit strategy on something that you have poured your heart and soul into for many, many years. But if you're caught in a reactive position to a sale of a business or a transition of a business, there are real implications and extreme financial implications involved in that. So we encourage, go ahead and talk through it. You don't have to map out an exact plan, but start answering the questions like, if I were to become unable to carry out my specific duties right now, who would take over? Who would need to step up, and who would need to fill some different roles? And then also, I've talked about the downside of that, the positive side of it. And during the pandemic, we actually saw some companies that were opportunistic, had a lot of capital in reserve, and they did some strategic investing. So the other thing I would say to business owners and business executives is, what do you do when you get the stupid money offer that you were not expecting and came out of the blue? We saw a decent amount of that over the past couple of years, and it can be life altering. So we want to go ahead and pursue those questions that you don't necessarily want to think about, but start having a conversation around that.
Mm-hmm. Those are three excellent suggestions for Texas business owners. I appreciate that. So you've talked also about the inflation and rising interest rates and soaring market valuations, the possibility of a correction or a slowdown. How do you keep clients on track in light of all of these economic factors?
If they have a wealth plan in place, we revisit it and then start basically testing into the most important things, which are, if for a client, we want to talk with them about, when we started working with you and we started on this plan, these were the things that you articulated that were most important. What we want to talk about now is, are those still the most important things to you? Does life look differently? And in a lot of conversations that we've had over the past couple of years, life did in fact look differently, and what was important to somebody 3, 4, 5 years ago is now less important than some other issue. So that's kind of where we begin. And I think the importance of that is, let's go back to our risk discussion. We focus a lot on market risk and what's going on in the short term and where the capital markets are, what's going to happen with stocks, what's going to happen with bonds, what's going to happen with real estate. That's all very, very important. But most of those things and those risks tend to sort themselves out through a full economic cycle. What goes on in your family and what goes on in your heart and your value system doesn't necessarily get impacted by what's going on through external factors. But there are things that change, family dynamics come into play, and there are things that do shift what is important to you. So I think that is the focal point, is to go back to that and say, in order for us to answer that second question, am I on track? The only way we can answer that is to define what are we supposed to be on track for? And we know, and a lot of times, what the answer to that question was when we began the client relationship. But we want to test in and do kind of the cool stuff about our line of work, which is a contrast to our commercial and corporate banking partners. We get to do the touchy-feely stuff.
Yeah.
We get to have those conversations around coffee tables and sometimes, unfortunately, in hospital rooms. So we want to make sure we get out ahead of that and really test into the priorities.
So you mentioned that client advisor relationship that needs to be obviously all important. It's changed, I'm sure, in light of the pandemic.
Absolutely. It's changed in terms of forcing us to take a few steps back and really examine our model and say, what are we delivering to our clients that is just table stakes that everyone expects? And then is there anything that we can do that exceeds those expectations? And my team and I spent a good amount of time just at the beginning of the year, kicking off 2022, examining every aspect of our process, from the very first meeting when we discovered a prospective client for the first time, all the way through the servicing and ongoing engagement of a long-term client or a long-term trust relationship, and really break down every aspect and say, all right, are we delivering on, first and foremost, what do we think are the core aspects that every client expects? And then ask the question, are we delivering on that? And then dig into what are some things we can do to exceed expectations that are a little bit different. And a lot of it comes down to communication. Mm-hmm. We have to be sensitive to not making any assumptions on how people want to communicate going forward. We have clients in their 80s that are phenomenal with WebEx and prefer it. We have clients that you would consider possibly high risk with some health conditions that you would assume would not want to meet face-to-face, that insisted on face-to-face meetings. Mm-hmm. So if we've learned anything through the past couple of years, it's been to do away with any preconceived notions and assumptions about how people want to interact, be proactive about asking that question. And I think this applies to anybody that might be listening in today, regardless of what line of work you're in. It may be time to evaluate, much like some of the food service companies do. How do we deliver our product and our service to our clientele and our prospective clientele in light of the new situation that we find ourselves in? Some people have become very, very accustomed to having the world brought to their doorstep and don't want to deviate from that. Others are so sick of staring at their living room that they're like a caged bird, dying to get out and go interact in an office or a conference room outside of their house. So I think it's just helped us get better at asking the question and enhanced our communication with our clients and prospective clients.
And you mentioned succession planning a little bit ago. Has the pandemic changed the way that you're advising clients around that?
I don't know that it's changed. Like there hasn't been any specific issue that has been a game changer on the succession planning conversation that we have, but I think it has pushed the succession planning conversation more to the top of the list of what we need to talk about. I mentioned the stupid money offers. I was just surprised at how some of those came in, and we would get phone calls from clients that said, look, my plan was to hang in and do this for 10 more years, but I've got an offer that not only provides me and my immediate family a very nice retirement, but it has stipulations in place to take care of my employees, which I never dreamed would be possible. An offer for me to stay on in a consulting role or as an employee for longer than I thought was possible, with a nice salary and benefits that extend health insurance and some other key factors for me. And so they were almost coming to us saying, please talk me out of this. And a lot of times we couldn't.
Right.
And that was a pleasant surprise. Other times we had the less pleasant conversations where there was an economic issue where the business was just really, really struggling, where it had not been prior to the pandemic, and the very, very difficult decision was needing to be made, or quite frankly, where the focus and the questions around health and family compelled a lot of business owners and a lot of business executives to question, is this really what I want to do for the rest of my days? And is it really time to evaluate something? I joke about how I don't know how it is for most people, but I have been on more walks in the past 2 years than I probably have in the 10 years prior collectively, just because, when you're in a remote working environment, you can stare at that screen for only so long, and you have to get out and walk. I've done more home repairs than I've would have dreamed of, because I was sick of staring at the stuff in my house that needed to be fixed. So it's compelling a lot of people to evaluate quality of life issues as well as economic issues.
Oh yeah, I don't know how you could go through these past 2 years and not have some thought about, what am I going to do with my life? What do I really want? Yeah, it's been such a difficult time for so many too.
And I think everyone got a dog. I don't know if that's the case. I think everyone got a dog in the United States over the past few years.
It does seem like that, doesn't it? At
Yeah.
least one or two.
Right.
So let's talk about taxes. That's everybody. Texans love taxes, right? Maybe not. Tax laws. Can you talk about the changing tax laws and how they may be impacting your clients and how you're advising them?
Sure. So tax laws our proposed tax laws can be one of those really disruptive issues that we talked about before. And so while we don't give specific tax advice, we do partner with a lot of tax experts, both in the legal community and CPA firms, and really kind of want to expand our team to include other advisors and other professionals to proactively have those conversations. So it again comes around to planning. We have to be prepared for a lot of things. And if we have a base case plan in place, regardless of what proposed legislation comes along, we can work through that, and we can do some modeling to address that. I think probably the most impactful one that we saw, or proposed plans we saw in the past couple of years, were proposed changes to the estate tax laws, which did not go through, but I feel very confident those proposed changes aren't going away. They'll probably come up and maybe possibly be hidden in other pieces of legislation in various ways, shapes, or form. And then the Secure Act was one that really, really altered how we address retirement accounts. IRAs typically, in most of my career, have been the last account that you touch. And the idea being that you want to stretch the IRA for as long as possible and let that compounding growth in tax deferral 1-2 punch continue for as long as possible. And with one piece of legislation, that strategy is not dead, but it is significantly changed. And again, that's something where we see one aspect of it, but we can't act independently of tax advisors and legal advisors. So it's forced us to really, join arm in arm and circle the wagons with all professional advisors.
Mhm. Do you think Texas is well positioned for an economic boom in 2022?
I really do. I mean, if you look at, most of the economic indicators stack rank by state, Texas is going to be number one or in the top 10 in just about every economic indicator. It's a fantastic time to be in Texas. It's a fantastic time, quite frankly, to be in the financial services industry in Texas, as you see people moving into the state. Although real estate is extremely expensive right now, if you
Very.
if you take a glance at a globe, we've still got a lot of land available and still a lot of opportunity. So I do. I think if you look specifically, here's an example. If you look at the Samsung win for a multi-billion-dollar manufacturing plant in Central Texas, if you were to poll people throughout the country, I think most of them would say, yeah, Austin got this huge economic boom. And if you look into the details of it, it's actually Taylor, Texas that got the boom, and Taylor's not even in Travis County. But what did happen through that opportunity was a strategy that I think Dallas has employed. Houston is starting to employ more, and that is for the mayors and the county judges and the city council people to look outside the immediate local government and start talking with some of the suburb and surrounding communities and see if there aren't some concessions that the surrounding counties can make that a larger county cannot make to help get the win and help bring in lots of employees and lots of tax dollars to the greater metro area. And so I think that the precedent was not set with the Samsung example. That's just the biggest one in recent history that I think is another reminder for all major markets throughout Texas that don't overlook the surrounding counties, don't overlook the suburbs and the opportunities that you have to partner. So I think Texas is learning from that and incredibly well poised to have some huge economic gains throughout 2022 and beyond.
I almost hate to ask because it seems like the numbers would be obviously astronomical, but how does Texas business growth compare to national trends? I mean, we know we're doing well.
Yeah, again, I don't have a specific number on, and you'd have to look at it by, different economic sectors, but go back to what we talked about kind of on the macro picture for a moment at the beginning of this. We talked about how commodity prices and rising interest rates kind of speak to a lot of things that are near and dear to Texas: energy, financial services, healthcare, I think is a major player in Texas, and certainly not just with COVID and all of the, revisiting of health issues that have come from that, but also just with the aging of the baby boomer generation. And quite frankly, the aging of my generation, the Gen Xers, healthcare is going to be a major player going forward. I mentioned real estate investing and opportunities for development remain huge. And then the good old blue collar jobs that have been such a big key for Texas for years. We're starting to see that commodity prices make energy, the energy sector more attractive, and that spills out into every basic material and industrial sector. So I think it's going to be a fun ride for the next couple of years.
So do you expect a strong demand for private wealth services?
I do. It's funny, and I expect a strong demand across the board in all types of however you define wealth management. I can recall being a young stockbroker in the late 90s trying to figure out how I was going to justify explaining to people how they should manage their money when I was broke. And from that moment on, throughout my entire career, I've heard nothing more than technology is going to take over and there's not going to be a need for face-to-face interaction in private wealth. And I have not found that to be the case. Now, I've found that certainly technology has enhanced our industry and made private wealth management better. And for a certain percentage of clients, that is exactly where they need to be. But I still see more and more that people from every walk of life, regardless of how investment savvy they are or not, or how much experience they have or not, there's always some compelling reason to stick up your hand and say, I really think it's time for me to talk to somebody and surround myself with a team of advisors. And that sometimes it's the perceived risk, sometimes it's the dollar amount, sometimes it's a family event, sometimes it's the amount of time that they spend investing. in that. We never know exactly what the catalyst is, but I think private wealth is a fantastic industry to be in, and it is poised to grow at double-digit pace for the foreseeing future, I believe.
Yeah, you mentioned generations. How's the generational shift and the wealth transfer changing the way that you do advise clients?
That's a very interesting question. So if you had asked that probably even 5 or 6 years ago, I think the generational wealth transfer discussions that we had were largely around the fact that people entering the workforce and launching their professional careers were a lot more mobile, and tended to not, necessarily center around where the family was, regardless of wealth. And now we're seeing that. I'll take my kids, for example, that they could have a job anywhere in the country and probably live in Houston, Texas, down the road from us, simply because you don't have to pick up and move across the country to go work for a company that's headquartered in California anymore, or New York, or Chicago, or wherever. So we're seeing this interesting shift where it used to be that we would plan for issues like, we have a large piece of family property and no one lives within 500 miles of it. Is it really worth hanging on to? That was a general generational wealth issue and challenge that we had to discuss some time ago. Now, that may not be the case. We may actually have the family close by and using and enjoying the land. So it's just ever changing. I mean, there's really no rule of thumb. And again, I go back to what I said before about not making assumptions. I mean, we don't want to make any kind of assumption about what we have historically experienced when it comes to generational wealth transfer, and just simply sit down with the family, as many of the family members as the leaders of the family are comfortable engaging, and just have these conversations.
Let's talk about cryptocurrency. What do you advise clients about that? I'm curious. I don't know very much about it. I know my son's dabbling in it. What do you make of cryptocurrency? Is it the wave of the future?
Quite possibly. It's fascinating. It's extremely volatile. It's something that's exciting. And generally speaking, the term that I hear batted around is everyone is anti-crypto until they understand it, and then they become pro-crypto. That may very well be the case. As an organization, kind of our official stance is, particularly since, I work for a bank, we have concerns about money laundering issues and security issues. I think it's largely still unregulated, and until we get a good read on where that's going to go directionally, we're simply not advising on it. We're not discounting it as a phenomenal potential investment opportunity. We're just not in a position where we can really offer that for our clients or make any recommendations about it, because there is so much that's still unknown. So I don't want to dodge the question, but we don't really have a specific answer for our clients right now. What we do is we have within our investment research group some people on our team that are dedicated to nothing but that, and they are, going over the data day in and day out, trying to understand it, so that we have some general information we can help educate our clients and let them make an educated decision. But we're not making specific recommendations on crypto at this point.
So how are you approaching estate planning strategies in today's climate?
Estate planning strategies are be prepared for everything. That every plan that we put in place for an estate plan is by definition going to be a rough draft until you die, unfortunately, because the estate tax laws are a political football. There are changes to the estate tax laws that come about not just in a bold upfront estate law estate tax law change, but also in other bills where it's kind of bits and pieces of different changes are attached in there. So it to me speaks to the importance of finding an attorney that specializes in this area. We have specialists on our team that many of them are former estate tax lawyers, fiduciary litigators, very qualified trust advisors. But we do not draft and execute documents. So it has to be a partnership. So I think where we start with a family and estate planning is as simple as, tell me what you would like to have happen, And once we get a rough list of that, tell me exactly what you want to avoid. And more often than not, it is, commonly, I don't want my family members fighting with each other over stuff, over my wealth. And I don't want a lifetime of sacrifice and risk taking to be to translate into people being cast apart and relationships being broken. So there's only so much that we can do once we get those questions answered, and then we really need to engage an estate planning attorney and specialist that can then translate what we're talking about into, oh, well, then this document or this specific strategy is what will help resolve that. So it has become more complicated, but it has represented a great opportunity for us, like I mentioned before, to kind of expand our team and really surround the client with a whole team of advisors that are all serving their best interest.
Sounds terrific. Is there anything you would like to add to today's discussion? Anything that's on your mind, you just want to put it out there before we go this afternoon?
The only thing I'll add is, I remain, you can't be in this business if you're not an optimist. And it's hard to be in Texas right now and not be an optimist. So, to those that are business owners and executives that are listening in, the work, the sacrifice, and the long hours that you put in, I believe the sky's the limit for where we can go. And I really think that there is no better time to be trying to create and manage wealth in the state of Texas right now. So the past couple of years have represented all kinds of challenges, but I think day in and day out, we get a little bit more towards what used to be considered normal life, and we'll make it through this just like we've made it through so many other events.
Great advice. I, like you, remain an optimist, and it is a great time to be in Texas. And Chris, we want to thank you for joining us today. Also, all of us who are joining us virtually, thank you so much. This concludes our series on what's next for Texas business. We hope you've enjoyed it. And finally, we want to thank our sponsor, Regions Bank. Have a great afternoon, everyone. Bye-bye.
Thank you.